Hello guys, it's Chris from TheTradingExchange.co.uk, and we're here for the next in our series of educational videos, which is going to be taking a look at the Fibonacci sequence and how that's used in our trading. We're going to take a look at a bit of a background into the Fibonacci sequence, the Fibonacci extension tool and the Fibonacci retracement tool, which you may well be familiar with the terminology, if not yet perhaps how to apply it on your charts. Okay, so the Fibonacci sequence is probably one of the most commonly used tools on for technical analysis when studying the charts. And it comes about from a very, very simple series of numbers, sequence of numbers that was originally created by Leonardo Fibonacci, who was a famous Italian mathematician. And he came up with a sequence that started with just two numbers, a 0 and a 1. And he realized a few patterns in this sequence, because if you add the two numbers together, or the previous two numbers together to create the next number in the sequence, you end up with this, a 0 on one of the first two. So you add them together, it creates 1. You add those two together and it creates 2. You add those two together and it's 3. Those two together and it's 5. So on and so on, so on and so on. And as you continue up the pattern, or the sequence, it will just follow the same rule. And after the first few numbers in the sequence, if you actually measure the ratio of any of the numbers next to each other, so for example, these two here, 21 and 34, or 34 and 55. So if you divide 34 by 55, for example, it equals 0.618, there or thereabouts. And if you measure the ratio between alternate numbers, so 13 and 34, the 8, 21, that sort of thing, then you'd get a number of 0.382. And as far as where these numbers come from, that's about as far as you need to know, because the ratios are golden ratios. Okay, and that's, jargon perhaps, but it gives you an idea of where these numbers actually come from, because you'll see them really quite regularly when we're using these tools on your charts. So, we might refer to things like the Fibonacci retracement level of 50%, or the 618 retracement, or prices coming up to the 618 extension, something like that. You might hear those phrases in the webinars and in the videos that are going to be on the website, especially to those of you who have subscribed to the full package. You'll see those in our training, in our training material. So it's a case of figuring out how to utilize that in ourselves. So when it comes to trading with Fibonacci, what you have to understand is that whilst these numbers appear in nature, they appear across a whole number of different analyses, if you like, not just in trading. They appear everywhere. They're kind of a self-fulfilling prophecy in trading, because all brokers, should I say probably fund managers, retail traders, institutional traders, algorithms, anything really that is actually going to be executing a trade will generally tend to be aware of these numbers and respect them in some way. And so because so many people are respecting them, it then becomes a thing. So if enough people stick to these rules, the rule sticks, if that makes sense. So it's all self-fulfilling. So the more that people respect them, the more they become respected. And as far as trading goes, the reason why these are important is that what you would have heard the old adage that you're going to take 2 steps forward, but for every 2 steps forward you'll take 1 step back. So 2 forward, 1 back, 2 forward, 1 back. Well, if you analyse that old adage is to do with a retracement of 50%. You've walked 2 steps forward, 50% of 2 is 1, so you've taken 1 step back. And charts and trading and markets will follow these patterns as well, and you'll notice them. They're really quite interesting when they happen. The DAX is the chart that I've got in front of me here, and it's a really popular market for me personally. I love to trade the DAX, and it really does tend to respect and follow these rules quite a lot. You've got 3 numbers to try and remember. You've got the 382. I'm just going to bring them up. Can't type, it seems. These 3 numbers, 382, 500 and 618. Okay, now these are percentages, so that's the 38.2%. that's a 50%, and that's a 61.8%. Okay, so I'm going to refer to those. So with Fibonacci tool, I'm using FXCM's market scope at the moment, and I've got a 5-minute DAX chart in front of me. It's the 19th of January today, 2016. We had a 200-point gap pretty much this morning upon open of the market. So if I just pulled a Fibonacci tool to most of where that open happened within the first sort of 10 minutes of trading, maybe even to the top of this the sort of mini jump, you'll notice that price flew up, let's say 200 points, and then started to pull back and retrace. And it got down to the 38.2, somewhere between 38.2 and the 50 retracement. That's quite a common spot that you'll find on the DAX. Normally 50% is quite a good one that they'll aim for before continuing to move up higher again. Okay, so that's an example. Let's just show another one. Okay, yesterday. If you want to take a Fibonacci extension tool from the top of a swing to the bottom of the swing to find out where a move might have happened, to see if there's any way of trying to predict what's happened or where price might want to go. Now we formed a bit of a doji, I suppose you can call it that, or a spinning top maybe type formation yesterday, and had this big swing high, big swing low, and it just gradually kind of petered out. And this particular tool that I've pulled together here is from this top to this bottom, and it's provided the 618, the 500, and 382 as well. You'll notice that we just peaked above the 618, but after that came straight back down again. The way you might utilize this in trading is you'll think, right, well, I've got a top here, a bottom there. I've started to reverse. If I went long now, what should I aim for? You might aim for the 50 retracement level, which would be there, and it kind of had a mini reaction to it, but then continued and broke through. So you might even, for example, zoom in on just that little section there. Excuse me while I'm scrolling the screen around. Put up a Fibonacci tool here between that bottom and that little section that we just pulled together there. And even within that mini run of what, not even an hour, it came down and almost touched the 50 line there before bouncing higher again. So the retracement tools are really useful, and certainly on the DAX, they do tend to respect certain levels, being the 50 to 61.8 and the 38.2 retracement. Okay. Now another tool that you have that you can use for under the Fibonacci side is an extension tool. And so a retracement tool just basically says, well, if you go from the top to the bottom, roughly where is price going to settle? Somewhere around the 50% retracement, or the 618 retracement, or the 38.2 retracement. You can build targets and exits and entries into your trading using those numbers. But an extension tool predicts where we might go beyond something. So for example, with this particular move here, and it's just a little section, I'm going to highlight into that area just there. Oh, excuse me. Okay, let's get rid of that tool. This little area here. So a Fibonacci extension, what it would say is, you go from the bottom of the move to the top of the move, and you apply the fact that you know it's just retraced, and now you want to know, well, how far is it going to move? It's done my 50% retracement. Now how far is it going to go? And now you're into an extension tool. So you've extended the move beyond this little pullback. And you have these numbers, which is just created. You've got the 618 extension and the 100% extension. What I tend to find when you get a decent one is that once you've got this mini pullback and it's respected at 50% and it continues to move, it generally tends to reach 100% at some point. If it doesn't, it doesn't. You can put a stop underneath the move and get stopped out. One of those things. But in this particular case, it has reached the 618 extension. And it was looking to go off and try and meet the 100%, just didn't quite get there. ended up tailing, petering off, and possibly get us stopped out down here. In which case, actually, we weren't stopped out. It would have just carried on moving. And in actual fact, we blasted straight through it this morning, first thing. Let's see if we can find another example of that. It works both bearish and bullish setups. So I suppose we could try this one here. So you got this swing down here, and you've got this mini swing here, which then continued up. You could try, for example, if I showed you an extension this way, from that top to it's just lagged a little bit, to that bottom, to that retracement. Okay, so I just had to move the lines to touch. In fact, that's almost a perfect example. Okay, so I've taken it from that top there to that bottom to that retracement, and it's plotted the 618 extension and the 100% extension, and we almost touched it to the pip. So it's a really useful tool to kind of roughly predict where the move is going to go to. So ways you could trade this then. So you could trade it just simply on the fact that as soon as it reaches a pullback. So I'm just going to remove that. Well, I'll keep that there for the moment actually. I'll just draw an extension, Fibonacci retracement tool, which is this one here. So on that move, it started to start to bounce. So if you went long, you'd think, right, okay, I'm going to go long here. I'm going to aim for the 50% retracement. So you get in, you trade it all the way up to there. There you go, happy days. You've just made yourself 60 points. Or whatever it is. £2 a point, 120 quid. Not bad. Once you've reached the 50%, you get out and you think, right, well, in that case then, I'm going to short from here. I'm going to short with my stop above the 618 retracement. If it goes above that, so be it. But I think it's going to turn here. And I'm going to aim for, you know, a 618 extension, or somewhere between the 618 and the 100% extension, somewhere in this zone. So you'd get in, you'd trade from, let's say, here, because maybe you were late and you didn't get caught in quite quickly enough. You trade somewhere down there. You've just made 120 points by risking 40. 3-to-1 return on investment. £2 a point, 240 quid. Happy days. And that's just from one move, like within 2 or 3 hours. And the DAX really likes these kinds of moves, and you can see them quite often. In fact, here's just another example of one that might be there. Let's just say you've got this move here. Okay, from that bottom to that top. You pull an extension, pull a retracement tool even, somewhere between the 50 to the 618 retracement, almost to the pip, landed in there. You'd go long from there with a stop underneath it, and you'd look for an extension. So you would now just remove that tool, draw the little down arrow, draw the extension tool. Oh, again, it's lagged, so I'm going to have to change that in a second. Draw the points, just press OK, change that point there to get it nicely on. And you think, right, okay, well, I'm going to go long from around about wherever it was down there. I feel that's 50% retracement, sounds good. I'm going to go long. So let's say you got in a little bit higher up because you were late or whatever, and you got out somewhere in the middle of this. That's, again, about 114 points that you've just got yourself. If you went for 100% extension, 137 points, £2 a point, you're looking at 260 odd, 270 odd quid. And you've risked maybe 50 or 60 points. So you sometimes have to sit on that drawdown. Certainly when you get, it looks like it's moving up, then all of a sudden you get this candle, it looks like it's coming back down again. It's very easy to think, oh, it's coming back against me, I'm just going to cancel the trade. But if you hold your nerve, quite often you'll find that it does tend to reward these kinds of setups. So that's how you can use Fibonacci to improve your trading, and the DAX is just one example. It works on all of the different markets. So have a look and see if you can find some on charts of your own, and good luck trading with it.